Good afternoon. Welcome to Daily Currency Update from the Currency Desk. On the last trading session of the week, that is on Friday, we witnessed some major depreciation in the value of Indian rupee. We saw the Indian rupee lose about 60-70 paise in the entire trading only. Like the US dollar has dominated the global currency markets, similarly it has also dominated the news flow and influence on the movement. Currently, as the Fed have indicated their stance of eliminating the quantitative easing 3 that is currently going on in the current year, that is 2013, there has been sort of risk off sentiments developed in the markets, and we have seen investors across the globe selling off riskier assets and going for safe haven assets like the US dollar. So based on this buying of US dollar, we are seeing some strength in the US dollar against the Indian rupee as well. Adding to the pressure on the Indian rupee is the fact that there is speculation of there's an expectation of increase in the gold import duty, as well as we have the current account deficit that is continuously going from bad to worse. In the near term, all the expectations of Indian rupee are pegged on to the RBI rate cut expectations, RBI policy measures or RBI policy announcements. People are expecting the RBI to cut policy rates as the inflation in December is expected to ease off or slow down. But yes, if the inflation doesn't slow down, then it does not leave much option for the RBI to go further. Again, another theory that is going around in the markets is that if the RBI cuts down rates, we could see the rupee weaken further, which will put an additional pressure on the inflation. So indirectly, if the RBI cuts rate, the inflation that is eased off would again move up. So logically, the RBI is not much expected to cut rates in this month's policy as well. On Friday, we had the US non-farm payroll data that came in slightly better than expected. So due to this, we had some relief in the risk assets, in the riskier assets. We saw the US dollar lose slightly in value, and people invested in riskier assets like the euro and the pound. Currently, in terms of dollar against the Indian rupee, we expect the pair to remain largely sideways until the IIP data on this weekend, that is Friday. Till then, we can expect the rupee to trade in the range of 55.20 to 54.80 in the spot. In terms of euro, we have seen a heavy fall in the value of euro against the Indian rupee. In the international markets as well, we have seen the euro against the USD fall from around 1.33 levels to even below 1.30 levels. Currently, it is trading slightly above 1.30 levels, mostly being pushed up by the positive sentiments from a positive US non-farm payroll data. But yes, we would wait to see if there is any further negative data from the euro front. Last week we had a negative string of data from the Europe in terms of the PMI data as well as in terms of the inflation data. Though the German economy showed slight resilience with a better than expected jobs data and as well as service sector PMI data. But yes, if the overall European data doesn't come as per expected or comes lower than expected, we could well see the euro fall below 1.30 levels, which would mean against the Indian rupee as well we could see some corrections in the euro. So based on this, we recommend hold short in the euro at current levels with a stop loss of the lifetime highs around 73. The pound has shown a string of negative data, and currently all investors are speculating that the pound that the UK economy could show a recession in the final quarter of 2012. So this means that we could see a further fall in the pound. Already pound is trading at 1 month low against the US dollar. Against the Indian rupee also, it has retraced a lot from lifetime highs. Currently it is slightly trading above 88 levels. So we can expect it to go down further. At current levels, we recommend a sell in the pound with a stop loss of 88.35 in the spot. The pound has fallen against the US dollar as well. This is also mainly because of the Fed's QE eliminating stance in the current year. So there is some sell-off seen in the yen as well. Though against the Indian rupee, we are not seeing that much downside, but yes, in the next few days we could see some upside until the Bank of Japan's policy statement on 24th of January. As soon as we have a actual monetary easing being done by the Bank of Japan, we could see the yen again continue its downfall against the US dollar and against the Indian rupee. Currently we recommend a sell only below a support level of 62.53 in the spot. Thank you.